I want to warn you in advance, so we're really going to get into it here about ICOs versus stocks versus legal. But before we do any of that, we want to start on the far end down there and let everybody introduce themselves.
Okay, well, I spoke.
Grab your mic, and by the way, if you could speak about 6 inches, 12 inches away from your mic, so we can have a really good recording of this.
Okay, well, now you're up now.
I guess
Yeah, now you're first.
Hi.
And bring the mic up to you guys so we can hear everybody.
Good afternoon. I'm Pradeep Goel, CEO and founder of SolveCare Foundation, and we are building a healthcare administration and payment platform.
Okay, Mark Bookman, I spoke just a little while ago. We're building a healthcare, skin care-oriented platform to solve the trust problem in that industry, based in Japan.
Chris Kehmeyer, I'm an operator in the ICO space or TGE space, whatever you want to call that, currently running an ICO for Solid Opinion.
Hi, Jacob Nair David from Vinex. You can learn more about us and sign up for more information at vinx.wine. Just leave your email address. Positively disrupting the multi-$100 billion wine industry.
I'm Gene Massey with Media Shares, a consulting firm that walks companies through the funding process and helps them market their offerings. Now, gentlemen, my first question is open to the panel. Probably, Chris, you might be more want to answer this. Why a token? And let me say that a little more, give you a little information on that. There is such a thing as a share of stock, and the share of stock can give a dividend, and you can have just about anything as a dividend of a share of stock, whether in-kind dividends, products, money, membership, whatever, a real honest-to-goodness share of stock. So why would I want a token which is not something that I can put into a stock transfer agent's account?
Well, that should be a good thing. Because generally speaking, you don't want a custodian, right? So that's just another middleman that you have to pay for his or her services, right? And so that's kind of the opposite of what blockchain is all about, right? Blockchain is traditionally peer-to-peer without the middleman. So that's at the core of your question, right? And
So if I'm doing the blockchain, I don't have a stock transfer agent, and I can't have stocks or anything like that? I mean, what are you talking
you
about?
can introduce one, yeah. I mean, you can create a Coinbase account or can create all kinds of middlemen if you want to. The beauty is you don't have to. You can hold your own funds, you can hold your own assets.
Okay. Well, if I have a Regulation A offer, well, first of all, the SEC has said, Jay Clayton has said, there has not been a legal ICO yet. Okay. And the reason for that is a lot of them have tried to do it as utility tokens. And so if we want to have it be a real securities offering, generally aren't securities stocks? I mean, you know, and have transfer agents for your stocks and a broker for your stocks. I mean, are we talking about two different worlds entirely here, or what?
Many different worlds, actually. So the main point being here, and the most important thing to realize, is that the SEC doesn't govern blockchain. It doesn't govern ICOs, it doesn't govern the internet. Right, so it governs the people of the United States. So it restricts the freedom of the United States citizen to partake in any of those token offerings. That's the end of it. So anything else is really just language.
They are cracking down on ICOs, so I beg to differ with you.
They are quote unquote cracking down on anybody that sold token in the United States and to US citizens that weren't accredited investors. Hence, most of the ICOs obviously don't happen here anymore.
So an ICO is a foreign instrument, is that what you're saying?
At the moment, for any token generating events that are doing it correctly, yes, they exclude the United States. So I encourage anybody to take part in any of the currently ongoing ICOs, and you'll probably find out that you cannot take part.
Jacob,
if you're a US citizen, unfortunately.
Jacob, can you want to
Well,
comment on this?
I mean, you can
'Cause-
take part, obviously, in certain levels.
Yeah,
You know,
PPM.
if you're,
Yeah.
yeah, pre-sale, and if you're a accredited investor, and, you know, playing along the line, the rules that have existed for quite a long time. But I just want to echo what you're saying, coming from outside the United States, and both in my regular business and my new venture, looking at a global audience. So I think, you know, what blockchain does is allow us to truly look at a global audience without a lot of the per country or per state regulations, which inhibited a lot of free flow of both financial transactions in the past, and even from, you know, bank to bank. But if we're looking at a future where, for example, somebody can be trading an asset-backed instrument, in our case it's wine, but be able to freely transact that without having to go through either state regulators or transfer agents, or all these things that add a lot of costs into the mix, but they can still trust the system, or, you know, that sounds like a good solution to me.
Comments, guys?
Sure. Well, there are 10 topics there packed into, we spent 3 hours on
And
this.
important
But,
ones, because there's
they're
so many
important ones.
people here that, you know, want to raise funding in the US.
That's right, that's right. So just on the topic of what is the token, right? So there are equity-like tokens, of course. Primarily, I think people are developing tokens which are utility tokens, but when you pre-sell it, then there's an investment supposition there, right? So, but in general, you can use a token for any kind of commercial activity, okay? So we're mixing apples and oranges for the most part. If the token is an equity, if it's tied to the back end of a company, the profit sharing, voting in the company, then it looks more like an equity security. If it's tied to the front end of the business, meaning there's rights to services that the company's doing at the front end of the business, it's a utility token, okay? I think the US is the only country in the world where there's a debate that when you pre-sell the utility token that it's a security. Okay, so we're off in our own world here. Most of the ICOs, 85% of the buyers are outside the US. So I think I concur that if we go towards the Reg A approach in the US to these offerings, then the solution for companies is to do Reg S only in the US and to do it only outside the US because it just won't be worth it. You know, I do concur with this. Right now, the big issue here is what happens with the U.S. investors or buyers of the tokens who want to get into this and are being prohibited around the world from actually even signing up for the accounts. And so, you know, it is Reg D and Reg S. Some big companies may want to do Reg A in the U.S. So we have to follow those rules here. Those are the rules. But I think we're hurting ourselves right now in the States.
Absolutely.
Well, I can't argue that we're hurting ourselves because we're way over-regulated. Now, does anybody here agree with me that tokens, smart contracts, all of this was invented to circumvent the current regulations?
Agree with you or disagree with you?
Yeah, take your choice. I
I'll
mean,
take
tell
the
me
dis-
how
I'll
you
do the-
feel
I'll take the
about it.
disagree vote.
Disagree?
Second that.
Yeah,
Okay.
disagree.
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 Yeah.
It can be used for anything. You can
So
do
if
it
you
for-
specifically look at the early token issuance, like if the look at the Ethereum ICO, like everybody who contributed to this, they didn't expect anything in return. They voted with their money for this particular network. They had no expectation that it would skyrocket to $800 or $1,000
No
where it is now.
expectation?
No, they had no
Most
idea
of
that
these
those
people
guys
that
were
bought-
actually building anything. And if they were building anything, they just wanted to see this particular supercomputer out in the world.
So where I come from, a token is something when you pull up and you put it in there and the gate raises and you go in, you know, or the washing machine, you put the token in, you get the clothes while. You don't get more later, you don't get a discount.
Well, if you stockpiled
That's
tokens,
a utility token.
If you stockpiled washing machine tokens, right, and then came back a couple years later when the price went up, and you were holding those washing machine tokens, you might have done well in your money.
Yes, but I tell you that in advance, that's a security. If I say it's going to be worth more later, then it's
Well,
a
how do you-
security.
How do you know if it's going to be worth more later?
It may not be, but if I say it's worth more later, or I'm going to sell it to you at a discount, isn't that a security?
Well, using that argument, United Airlines would have to register as a money transmitter,
I
right?
told you we were gonna
They
get-
sell you points, right? And you can exchange them later for a ticket, right? So under these circumstances, it would be a security as well, right?
Well, I think the value of smart contracts and blockchain shouldn't be seen from the prism of securities. It's a technology that has a lot of use cases. One of the use cases is issuance of tokens that may be utility, security, or some combination. But I think it is a bit of a stretch in my mind to say that technology was invented for a specific use case. And even if it was, let's stipulate that, the way it is being used is to actually drive real business value. And to that regard, whether the internet was invented for a bunch of bored kids to exchange chat messages didn't really stop it from becoming a worldwide power, transformative power. So in that regard, I think blockchain smart contracts have tremendous appeal that to somebody like me coming from a very highly regulated and conservative industry has unvarnished appeal regardless of what other use cases that are highly suspect are on it. So, if we can argue that many of the ICOs are not well-intended, will not succeed, or are not really utility tokens, that doesn't change the fact that you want to use the technology for what it can really do.
Talk about technology. I'm interested in ICOs, so I've been studying some ICOs, and I look at the ICO and I go, huh? What? It says that, this is good, we're going to do here, and this we're going to do this, we're going to do that, and it's like, huh? On a lot of ICOs, do you agree with that?
Well, yeah, I do. This is why I think it takes multiple domains to evaluate any ICO. You really need to have some domain experience.
What do you mean by multiple domains?
So I've looked at a whole bunch of ICOs, and I think I got to the same point as you did, which is, should I buy this one? I'm very tempted, but I don't know anything about the auto industry. I don't know anything about the supply chain, right? Mm-hmm. So I think we need three things when we look at the ICO. We need domain experience in that industry. We'd have to have someone who knows something about economics and some knowledge of IT for what does this token do. Mm-hmm. But if you put those three things together and you discuss it, then I think you can get an answer, which is, this one can fly.
Okay, now, smart contracts. I haven't read too many smart contracts that really, really lay out all the risk factors. Whereas with the SEC and your filing documents, you've got what happens if you die, have you ever done this before, what are you going to use the money for, every bit of the money you're going to use for, how much money do you have now? I mean, it's really, really very specific. And the smart contracts that I've seen don't have those elaborate risk factors. And so that brings up the question. How many of these ICOs have been profitable and returned a profit to the investors?
Well, most of those ICOs have been done on what's called the ERC20 token standard issued by Ethereum. So they don't necessarily develop their own smart contract per se. They might add a couple of functionalities to it. They should. What you'll see in the next couple of months is more sophisticated smart contracts on other blockchains.
Well, how about profitability on all these? I've heard all these ICOs, you got $850 million from all these different things. Can you name an investor that's made a profit on that and have liquidity and actually put some money in, got some money out with a profit?
I could, they'd shoot me, but...
Yes, of course.
Of course,
I
yeah.
mean, what percentage of them are profitable?
And the point here being is that there's only so few million of token holders right now. I mean, everybody is making it sound, and by everybody, I mean the popular media, like John Doe Public is partaking in those ICOs, which is not the case. There's maybe 10 million wallet holders out there. Most of them are geeks, technologists, and most of them come from the mining part and/or they invested into the space early, bought the token because they thought it was interesting, kind of a gambling scenario. Now they are divesting what they earned on top of this. But we're still at the very, very beginning, and of course it's a bubble of sorts, but it's a good bubble, right? There's lots of little experiments, some of them are bigger, that raise $850 million right now. We already raised almost up to 70% of what we raised last year. So we're gonna see 5 times the amount of what we raised last year, but in higher quality projects. specifically towards the second part of the year when more interesting blockchains come on the market. Because what most people don't understand is basic blockchain economics, that transactions on the blockchain, specifically on Ethereum, cost money, right? They're not free. So everybody who's out there raising money right now telling you he's going to store stuff on the blockchain, you got to realize and do your math whether or not this actually makes sense economically. Just look up the gas prices for Ethereum transactions right now and then do the math and see, okay, if I want to record one record that cost me 5 cents right now, who's paying for that? Who's paying the 5 cents? If that happens 1 million times a day, that's a lot of money. And so right now it's about educating the public on how those economics actually work. And there's very little education, a lot of misinformation out there. And a lot of this is driven by the incumbents, obviously, because the banks and middlemen have everything to lose, right? So they're going to hold on to the legacy technology as long as they can. Because this technology is not as relevant for us here where everybody has an account, everybody has a credit card. It's more relevant for people in third world countries where they never had an account, never had an ID, but all of a sudden they're able to transact just using their smartphone. So that's why when you go to other countries, you see people actually using it on a daily basis because their currency might not be as stable as the US dollar, or they don't have an ID to actually open up a bank account. You're fulfilling an immediate need. So yeah, from the United States perspective, yeah, a lot of people consider it gambling because, yeah, they don't have a need for it. If you had a need for it, you would look at it totally different.
I can certainly see, one second, I can certainly see the value in Zimbabwe. I have a $5 billion Zimbabwe note, okay? So I can see the value in some places of the cryptocurrencies. But how do I buy something if one day it's $10,000, the next day it's $8,000, the next day it's $11,000? I mean,
you use the right currency. You don't use Bitcoin. Bitcoin is a store of value. So you use a different currency that's more adequate to that particular network. I mean, you can buy any ticket right now on Expedia using Bitcoin. I would suggest against it. I would say that you hold it because it's going to be likely worth more than the $11,000 or $12,000 that it's worth right now. So I would go to a different currency if you can in that particular instance, or hedge it or loan against it. But there's 100-some currencies out there right now that you could use.
Right, I just want to talk about, going from what you were saying, the expectation value, before Facebook turned $1 of revenue or generated $1 of revenue, it was still valued at tens of billions of dollars. So I think if you have to look at the expectation value and why people are pricing things up in the crypto world, is there's an expectation value that real applications and real revenue and real profitability will get driven by these new infrastructures, and that perhaps they will be a better way of doing business for certain verticals than the current infrastructure. And so if you're leapfrogging from what could be a very outdated distribution system, depending on what area you're working in, and you're leapfrogging using blockchain technology, and you're able to tokenize in a coherent way part of what you're doing, then it makes sense. And in terms of expectation value, people will give money towards that the same way that angel investors and venture capitalists have given lots of money over the years to things. Some of them have worked out and some of them have not. And I think investors in general need to realize, and you could say the same thing in terms of picking your own stocks, some things work out and some things don't. Some things go up and some things go down. So I think everybody has to be savvy about that. But the expectation value is there, and I think it's there because people see that real things will happen on these networks.
Now, you say you're a conservative investor or money manager, right?
No, from insurance, health
Insurance, you're from the conservative insurance industry, right? And so how are you using blockchain, cryptocurrencies, ICOs? Tell us about what you think about them.
So we are using blockchain to handle the backside of insurance, which is eligibility, enrollment, payment, adjudication, reconciliation. And that typically involves a number of parties: patient, doctor, insurer, employer, referral specialist. And the big problem in healthcare, of course, is that I have to get everybody to connect to my systems to transact with me, which then creates my own private ecosystem. Then I force you to live inside the ecosystem. Everybody hates me as a doctor, as a patient, because you are inside my little network. And if that network is not big enough, well, tough luck. And if it's inefficient, well, tough luck. So the idea of blockchain used properly is to decentralize what I really don't need to centralize for the benefit of you, the patient, or the doctor. but I still need to maintain control over cost and utilization of care. So I can do that through a tokenization. So I can give you a token to go see the doctor, but I don't need the doctor to already be known to me. If they accept the token, the transportability of that token allows me a guarantee, transfer of guarantee that they'll get paid from me because I'm the issuer of the token. So it suddenly breaks down a lot of barriers to care.
Now, who regulates you?
Uh,
You seem like a nice fellow, seem like an honest fellow.
Well, obviously appearances are
But
deceptive.
normally with a stock offering, you've got a certified audit, you've got all kinds of FINRA rules to protect the investors. Who protects your investors?
So first, the issuer of the token is a regulated entity. Insurance companies are highly regulated. So if I'm issuing a payment token, I have somebody called the insurance commissioner, even worse, the governor, and so on, and I have a bunch of other auditors of every nature breathing down my neck. So I have to, and all they want to do is to make sure that I am spending the mutual dollars collected by premium for the right reasons. So using a tokenized mechanism to streamline my operations isn't any more or any less regulated than today. What I am doing, though, is I'm saying, look, Mr. Insurance Commissioner, I'm going to reduce the cost of care. I'll have more money towards care and less money towards administration, which no governor says no to, or no administrator of a Medicare or Medicaid says no to. So the regulation doesn't change. The fact that I have to be a responsible steward of your money doesn't change at all. Like banks using blockchain. They're not going to suddenly become purely speculative entities and start frittering away money,
Okay,
hopefully.
but you're an exception because most of these tokens and ICOs are in instances where they don't have a certified audit. They don't have a valuation firm that gives a third opinion on what really is the value of the company. Am I right about that?
Yeah, but again, if someone's making a derivative security, a crypto equity security, then everything you're talking about makes sense. But if they're making a token for some other purpose, a utility token, it should really be outside that discussion. We already have laws on the books. So the Commodities and Futures Exchange is probably a good place to regulate something like that. But we have fraud laws. We have many things that already regulate this. So I think over time, what I'm expecting is for the utility tokens, when there's an ICO, there'll probably be some more rigid disclosure rules.
So who's going to
Disclosure.
enforce those
Probably, well, it could be the Commodities and Futures Board. I'm not sure who it would
in
be.
the U.S.?
Well, I think around the world too. I think this is what's going to evolve, is that there should be some disclosure rules of things you need to disclose. But it's not the same thing that you disclose in a financial statement to shareholders, because they're not shareholders. So we don't want to disclose things to non-shareholders who aren't shareholders.
But they have an expectation, even though they may not be shareholders, they have an expectation of some future value of some sort. So who's going to assure that they got a lot of money and you know what, we decided that we're not going to do that after all, we're going to use this money and I'm going to get me a Ferrari and whatever.
But we already have laws that cover that, right? So that needs to be enforced. You know.
Here we do, yes.
Well,
No question
most
about
countries
it.
around the world do.
Most countries around the world, don't look kindly on outright fraud. So I think that's your baseline, is that outright fraud is outright fraud. I think questions of disclosure and transparency and how transparent a business should be or could be, depends on whether they see that as part of their mission, as part of their ideology. I know in terms of what we're trying to do, we're trying to disrupt an industry that's kind of shrouded in opaque distribution mechanisms. So if we did that and replaced it with another opaque distribution mechanism, we wouldn't be accomplishing our goals and we wouldn't succeed. I think if we can further transparency and bring actors closer together, which is part of the ideology of the Bitcoin and blockchain to begin with, then we'll be fulfilling our goals and we'll be a successful business.
How about liquidity? If I do a regulation A, it's not going to be really, really liquid, right, unless I'm NASDAQ listed and got some huge revenues. But if I might list on the OTC QB or QX or something, I have some sort of liquidity, some sort of regulation to assure that I might be able to sell some of my stock at some point. But what is the liquidity of an ICO that's done, in another country? And how do I get out of how do I get my money back on some of these deals?
If it's an interesting project, the large exchanges will list it, you can sell it any day. If something that's not as interesting, yeah, you might be sitting on this token until someone decides to put it on an exchange, or you have to trade it peer-to-peer. But if it's an ERC20 token, you can trade it peer-to-peer with any ERC20
So
wallet.
liquidity is basically right now up for grabs, right? I mean, it's not, there's no mechanism
Right.
for sure liquidity.
Well, I just want to challenge you on NASDAQ, for example. I know quite a few companies on NASDAQ that trade by appointment. In
Oh,
other
yeah.
words, they don't
No.
have a lot of liquidity.
No, they
So
don't. I
nothing,
know.
nothing
That's true.
guarantees you liquidity at a certain price depending on how much you want to sell. So we're always subject to supply-demand issues when we're seeking liquidity. You know, and expressions like leaking out stock and things like that, those are that are not new expressions.
Sure.
So I think sometimes we think we're inventing whole new ways of doing things when we're not really. We can look back and see how things have played out in different markets, and when we're looking to see what's going to happen in these markets, they're not going to be that different. There's going to be, you know, issues of supply and demand, and just as you said, in terms of, you know, exchanges and listing on multiple exchanges, which you can do already right now, an arbitrage situation sometimes. But, you know, at the bottom of it, if you are generating interest and doing what used to be called investor relations, people will know about what you're doing, and they'll be interested in playing a part of it.
I bet we've got some really, you know what happens a lot of these panels is you save 30 seconds for questions. And so rather than do that, I bet you the audience out there has got some really good questions that they'd like to direct. There's a lady right there. Go ahead, darling. And okay. Can somebody give her a mic? There's a mic right here on the, maybe borrow one of the mics and so we can get the questions, Sydney.
Sure.
Because I know this lady's got an excellent question.
Got it. Excellent question. Okay, my name's Kelly, and I'm from Ascendient Capital. We're a registered BD. I think I said that earlier on. So we deal with the SEC daily, obviously. And we definitely see blockchain as a new web, a new technology that's going to ever change the world. So we're on your team as far as that's concerned. But there is a reality. In the United States, the SEC does govern securities. And in listening to you talk about a utilities security, and I raised my hand when I said, yeah, I think a lot of it is trying to circumvent the SEC.
No, they
because
wouldn't try that.
no, who'd say that, right? My question is, when you're talking in terms of a utility token and not being a securities, I'd like to hear from you what you consider to be a real utility token that is not traded in the aftermarket with any anticipation of making more money than was invested based on the work that's being done from a third party. So if that token could be 100% usurious for something, but if it goes into an aftermarket onto a trading platform and trades for a higher amount, it is a securities. I don't care what anyone says, that's what it is. So you tell me how something that's 100% usurious, that's on one of these trading platforms, doesn't fit into the U.S. securities. I'd really like to understand it, because it could be 100%.
I think it's being heard.
Yeah.
Sure. No, so I'm not an attorney, so I'm not going to pretend to be one.
Hold-
But what I will tell you, though, is there's the legal issue of whether you need to follow the securities laws here, and then there's how the token is used. And then there's the phases of the token, okay? So in the U.S., we have to follow the regulations. So you have Reg D, you have Reg S, you have Reg A, okay? Or if you're going to sell the token with an expectation of profit, then you have to follow one of those. Or
So would you agree
Or
that-
you don't sell it.
So
right?
would you
In the
agree? I
US.
know you said don't do business in the U.S., but to me,
Right.
don't do business in the U.S. means you don't live in the U.S., you don't do any business in the U.S., your tokens aren't sold, your business isn't ever going to be
No
done in the
U.S.
U.S.
investors.
No.
I mean, your
It's
token
not-
might be circulated here for business purposes, but it can't be sold here, though. You
Right.
cannot sell it on an open market to someone who's trying to hold it for value, for profit, right? Yeah. So
For value
but-
purpose,
but So
correct.
there are two topics. One is if you're pre-selling the token and the buyer expects to make profit, it's regulated by the SEC.
Right.
That's black and
Okay.
white. On the other hand, if the token is being used for some type of access to services,
Put it in a washing machine,
put it
right?
in a
That's
washing machine.
perfect. I understand
Then it's a
that.
utility, all right?
That's
But
the
you may
trading,
pre-
it's
you
when
may
that
pre-sell
token
that
goes
token.
onto a trading mechanism that we have the problem with.
Right. Pardon me, what was that?
Said when that token that you put into a washing machine then goes onto a trading platform where somebody is making money, and somebody asks, when have any investors made money? Yeah, a lot of them made tons of money on the trading of the token.
Then the trading platform will be regulated, right? So let me give you an example of how Japan is regulating this, okay? They came down and said cryptocurrencies are good, and we're not regulating the currencies themselves, only the exchanges, okay? So now I think there are 150 exchanges waiting for approval in Japan. And they have liquidity requirements, identity, disclosure, and all these things, okay? But as far as the tokens are concerned, we don't say, there's no comment, essentially, okay? And I think I'm hearing that's how a lot of countries are going to go in terms of regulating this here. Now, we're all tied up with these. Is it, the four-pronged test, and if there's a profit, motive here, then it's a security. This is a very American thing right now. And I think we're all tangled up in it. So there needs to be some rationalization to this.
The SEC's not tangled up at all about it.
No, they're not tangled up.
They're
We are.
very clear about it.
Yeah, we're the ones that are tangled up. So, I mean, I have some ideas for what would be a good simplification to this, I think, but it is what it is right now. So, Reg D or Reg A, and that's it. And so, or you do it outside of the U.S. But the SEC is very clear about that too. If you're going to sell it outside of the U.S., you follow Reg S, and that's it. And so, if the tokens come back here on their own, I don't think there's anything we can do about that.
There was a Cayman Island company that got busted for selling to U.S. investors. And so as long as you don't talk to a U.S. investor and you exclude them and prohibit them and make it impossible for them to invest in your deal overseas, then you're okay.
Then my next question is, under that situation where a company has done that, but then they later want to come into the U.S. because the U.S. is a huge marketplace, what are they doing? Because their cap table is now screwed up because they've done a non-SEC regulated transaction. So now if they ever want to come into the U.S.
If you rob a bank now versus later, it's still robbing the bank,
Yeah,
That's my
well,
question.
I mean, so a lot of ICO advisors have advised me to set up a company in a foreign.
Give it to Laura.
So there are Singapore and a few other jurisdictions are very favorable to ICOs, Estonia and others. And so I've had many proposals to say that I should set up a company in those markets and do the ICO there. But as an American, as a U.S. company, there's really that doesn't solve the problem. So you're
Okay.
gonna have the same problem anyway.
Sorry, one last question, real quick. Yeah, go ahead.
Yeah, I'd like to ask about the decentralized exchange. Is that subject to regulation, and how can we regulate?
Jane, repeat that question for me.
Decentralized exchange. What's the story on that?
Well, exchanges, as you know, are the opposite of what blockchain is, right? Blockchain is peer-to-peer, so every exchange eventually should be decentralized, right? So if you're looking at Coinbase, Coinbase is not an exchange. It's an entry drug. Everybody should try it and then move on to something more useful. And to that extent, no, as a regulator, you don't regulate it. And that comes back to the blockchain doesn't exist in the context of regulators. Regulators exist in the context of blockchains, right? The blockchain will go where it blooms, right? Where people support it, where you can build an exchange. So to that extent, again, it comes back to regulators exclude citizens. They don't exclude technology.
Guys, we're going to have to take this outside, all right? Thank you very much.